whoops, wrong one. 3,500 times 0.005. That would be $17.50 at 0.5% risk. And that would mean at a 35 pip stop, you're going to have to trade some micro lots. Okay, again, it's all built in there. So yes, Harry, your calculation is correct. I'm still somewhat confused about EFX Group and MB Trading and how they may or may not relate to one another. EFX Group is an introducing broker for MB Trading. It's really the same software, same back-end company. It's just in the futures world, they have what are called FCMs, which is a futures commission merchant. The FCM then has underneath them, kind of like a multi-level marketing setup, what are called IBs, or introducing brokers. So the brokers are basically introducing business to the FCM, and they get paid a commission for that. So the FCM, in this case, you've got MB Trading, and then underneath them you have the EFX Group. And they actually just happen to be here in Arizona. They've got offices in Mesa. In essence, they're one and the same. EFX has their own support staff. MB Trading has their own support staff. So whether you decide to take an account with MB Trading or EFX Group, in my book, it's pretty much one and the same. They're one and the same entity as far as the overall experience goes. Now, however, EFX Group, money-wise, since they're housing the account with MB Trading, there are some issues. What happens if EFX Group goes out of business? What happens to your money? That may be a concern. If that's the case, then you might want to go with the parent organization of MB Trading, who in theory at least is a little bit better capitalized. Mac, please explain why the pound went up on the FOMC date last month. My impression is that the dollar gained some strength as less is required for exchange, and I was looking for the currency pair to go down. Well, first of all, you need to understand you have your relationship wrong. Okay, what people, what institutions and what syndicate traders are looking for in the Forex market is interest. Okay, remember, they don't care really whether the pound moves up or down by 150 pips. I mean, that would be a joke to them. What they're looking to do is take $500 million and park that somewhere where they can get 6.5% annual interest. So at $500 million bucks, you got to know that that's a lot of money every day. So then it becomes a calculation of what is my overall risk in that currency? Because if I buy and price goes down 6.5% in the year, I've just broken even. Okay, so that's why, I know that's a really simplistic answer, but that's why if we go up here to the daily bar, you can see that the pound really isn't going anywhere. Because there's the dilemma. What happens if the pound goes down 6.5% in the year? If I'm making 6.5%, excuse me, I had to adjust my chair. If I'm making 6.5% on my money, I'm just going to break even. So they're not willing to commit massive amounts of capital until that all gets sorted out. Well, in the meantime, if the United States lowers their interest rate, why in the heck would I want to put my money in the U.S. when I know the most I'm probably going to get is 4.5% on big chunks of money? So if I've got $500 million bucks that I'm looking to park somewhere, and this sort of gets into carry trade and the whole idea of interest rate arbitrage, but why in the heck would I put my money in dollars? The Federal Reserve basically guaranteed that the big money would flow out of the dollars